Hello, friends. I have been studying the world of investments and finance for many years, read quite a few books on this topic, listened to hundreds of different interviews with investors, businessmen, and successful people. And every time I can't shake the feeling that something is left unsaid. All the success stories seem to be carbon copies and miss the most important thing. They bypass and don't touch on the main question: what exactly made this person rich? Why did he suddenly fail at the beginning, and then suddenly start earning millions? Or why did his investments become successful, start bringing in tens of millions? What happened? Attempts to find answers to these questions in fundamental analysis of securities, studying charts and past events, all this, unfortunately, did not give me an answer to these questions. When reading the biographies of successful people, investors, I came to the understanding that something important, something more valuable is being overlooked. Moreover, this valuable thing is not at all in what these investors talk about in interviews for a wide audience. When you are going to take your hard-earned money to some investment fund or buy another IOU, ask yourself simple questions. Do you have experience, skills in the field of finance or an economic education? Do you have the skill to evaluate the economic activity of the issuer, the one you are going to lend to? Can you find investment ideas that are hidden, that other market participants do not see, that other people do not see? If you cannot confidently and affirmatively answer at least one of these questions, then it is time to think, to weigh your decisions again. Are you making a mistake? Have you had any particularly outstanding results in terms of the return on your investments in the past? If not, then on what basis do you think that this will work out now? This leads to a logical question: why do you continue to watch videos and read channels on the topic of evaluating stocks, bonds, and various investment instruments? Why are you trying to analyze the stock market, cryptocurrencies and other derivatives, looking for that golden grail that will allow you to get rich quickly, get tens or hundreds of % profit? Instead of paying attention to the main thing. To what will really make you rich, what allowed you to earn the money that you are now trying to increase? When I, for example, watch videos on financial literacy channels, I notice, many speakers on these channels love to juggle numbers, analysis of past events. The author of the channel, for example, declares, "I am a billionaire, or a millionaire." It is clear that an impressive figure is needed in order to impress you, to throw dust in your eyes. Like, listen to me, I have learned the truth and now I will tell you everything. But in practice, after listening to this or that podcast, interview, we do not always understand how a person was able to earn his billion. They talk about what kind of lifestyle they lead now, what they are doing at this very moment in time, but they forget, do not tell what they did before to come to the state that they have now. Famous and successful people usually tell abstract thoughts, like, I suffered failures in business at first, I was in debt and in continuous losses. And then suddenly I became a successful investor, I found that very point of support. As if some kind of insight happened. How exactly did he suddenly find it? What happened? Info gypsies like to talk about psychology, about the insight that suddenly overtook them as soon as they became enlightened or found their mentor. And then they hint to you, the listener, that, like, it would be nice to buy an educational course from them. It would be nice for you to trust their knowledge and take a paid course with them. The world of finance and money is full of false correlations and cognitive errors, distortions. People from the world of investments, as strange as it may seem, look at a hypothetical Warren Buffett and reason something like this: Buffett is a billionaire because he invests. And I will also invest and I will also become Buffett, as rich as he is. With the same success, one could take any fact from the life of this man, from his biography, and make a similar conclusion. Buffett drives a Niva. So you should start driving a Niva and you will become just as rich. Or Buffett eats McDonald's hamburgers for breakfast and drinks cola. Maybe you should start eating the same thing and you, like Buffett, will become rich and successful. It sounds stupid, of course. But in essence, this is what all this reasoning looks like about the fact that in order to become rich, you must certainly invest on the stock exchange, as Buffett did, is not confirmed by anything other than guesswork. Cause and effect relationships are built that are unscientific and may turn out to be false. Our psyche seems to build convenient imaginary correlations and tries to adjust them to reality, to our life. People reason like this: someone in the past made money on the growth of quotes, for example, cryptocurrency. This means that now I will start buying the same cryptocurrency and will also definitely become rich. Someone bought Gazprom shares, and I will buy them too. Such imitation usually does not lead to anything good. All popular financial gurus first become rich, and only then begin to enthusiastically talk about some of their actions that supposedly made them rich. But in fact, these actions may have nothing in common with useful recommendations for you today. In the past, when they themselves, these people, were poor and were just starting to climb to the top, then none of what they are now offering from the screens of smartphones, none of this they themselves did then. But I would be interested in what exactly this person did to become rich, before becoming rich. And not what he is doing now. For example, a person tells how he became rich: I bought Bitcoin in 2015. But we are all interested in how to repeat the same trick a second time, repeat today. Doesn't know. In general, as the famous saying goes, money loves silence. Nobody shares really worthwhile ideas. In all these numerous books and courses there will be no really practical useful information for one simple reason. If those who sell these courses and trainings really knew valuable information, then, of course, they would not share it with a wide audience, robbing themselves, but would implement these investment ideas themselves. And they would earn a lot of money on their own. Why should they do info business, run some social networks, YouTube channels, sell you educational courses? But unfortunately, rich guys often forget how exactly they got rich. For example, Warren Buffett had a rich and influential family. Buffett's father was a member of the House of Representatives and one of the founders of a large brokerage firm in the USA. Few people mention this when they talk about the merits of the greatest investor of all time. Or the fact that, for example, Elon Musk's father owned half of an emerald mine in Zimbabwe and some large businesses in South Africa. Somehow everyone forgets, for example, that Bill Gates' mother was the daughter of the vice president of a very large bank in the USA and later became the president of this bank, and the father of the future founder of Microsoft was a successful lawyer and president of the Bar Associations of Seattle and the entire state of Washington. You can build cause and effect relationships and correlations in different ways. Probably, if Bill Gates had not studied at Harvard University, if he had not gotten into the most elite environment, having access to the first computers in America and in the whole world, access to technology, then who knows whether he would have achieved his success later or not. Financial gurus often tell us the so-called secrets of success, secrets of wealth, from the screens, but they themselves did completely different things on their way. First, they become rich and successful, and then they start talking about strange things that supposedly made them so. How did you increase your capital? What shares did you buy? What bonds? But you, listeners, for some reason are very interested in this information, trying to copy, to imitate today's millionaires. But it is not the tools themselves that are important. It was possible to randomly select securities during a period of general growth on the stock exchange and still get rich. Even a monkey randomly selecting a portfolio for itself was not inferior in profitability to any successful investor who used technical analysis or fundamental analysis. That is, your focus is on something completely unimportant, on how to get magic advice, how to get that very magic pill that will make you rich. This is a mistake. For example, Warren Buffett's average annual return over the past 25 years has not exceeded 7.4% compared to 7% for the market as a whole. That is, he hardly beats the S&P 500 index fund, which anyone can buy without any special knowledge. Just randomly bet on the 500 largest companies of some country. To do this, you do not need to study tons of materials on investing and study the company's reports. The stock exchange and investment instruments are just a means of delivering your capital to yourself in the future, nothing more. This is not a tool for forming capital. Capital itself is made exclusively by creating value for people, for society. Only this way and no other. I talked about the key aspects of capital preservation in other videos on this channel. In short and simplified terms, you need to try to earn a lot and spend little. That's the whole secret of success, a simple indicator called the savings rate. All other strategies are secondary, derivative. And the secret of wealth lies rather in the correct distribution of your time, intellectual resources in the right direction. That is, in professional growth and creation, I repeat, of a sought-after product, goods or services, or selling yourself. What I am saying now completely breaks the scheme of all investment gurus who are focused on producing educational content on finance. Because they need to sell you ideas, services related to investment following, subscription to some of their paid investment platforms. They earn money on hamsters who dream of free cheese in a mousetrap, of a magic pill that will solve all their problems overnight. By the way, the craving for a magic pill can be traced in psychology in most areas of our life, from medicine and education to any production. A person always wants to easily, without effort, quickly get the desired result. To cure a complex disease with a simple pill, to correct life's failures by purchasing self-development courses, and so on. But to maintain health, to prevent diseases, it is necessary to constantly maintain a healthy lifestyle, get rid of bad habits, for example, to adhere to certain uncomfortable restrictions. All this, of course, is less attractive than a magic pill. Give me a simple solution. Or perform a magic operation for me so that everything goes away. Yes, that's what we love very much. Approximately the same analogy is with the accumulation of capital, with the acquisition of financial well-being. Buy our options, shares, promissory notes, and you will immediately become rich. Thus, if you briefly answer the question of what will make you a rich person, the answer will be something like this. You should learn to realize your professional abilities, find your strengths and realize them in a specific professional field. It sounds very primitive, but this is the most difficult path. But the right path. How to learn to hit one point, directing all your efforts to a certain type of activity. For some people, building their own business is right for them, for others, a career path, building a successful career, getting a position, working for hire. It doesn't matter at all. The main thing is that you can recognize your best abilities, realize what nature itself has given you, your intellect or your physical strength, your energy, or your ability to communicate with people. If your child, for example, has the appropriate natural abilities, talent, for example, in playing football, then with the right approach, with methodical hitting one point, this child can become a very wealthy person. By the age of 30, sign a contract with a famous football club and provide not only for yourself, but also for your entire family for years to come. It would seem a simple idea, just find and implement your abilities, knowledge, skills, abilities. But paradoxically, most investors do not understand this simple truth or do not want to understand. You do not need to try to multiply a more or less large amount of money that fell on your head, spending all your free time studying investment instruments. You most likely will not become rich if you do this. Spending your energy, strength, on studying investment instruments, instead of doing your professional activity. You forget about the most important thing, about the most significant part of your capital, about your competencies, knowledge and skills in a specific professional field. If any successful investor, instead of buying securities, simply bought income-generating real estate with regular rent, the profitability would be no less, and sometimes much more, than on the stock market. Ask yourself, where did you earn the money that you are now bringing to the bank? What area of activity has the greatest profitability in your performance? In addition, do not forget about time. Ineptly investing your time is, in my opinion, even more dangerous than ineptly investing money. But it is important to know what exactly you make money on, what is your end product. Are you selling yourself as a specialist or your time, your services, your intellect? The greatest income usually comes from selling your intellect, a complex product, the end product, if you like. For example, if you want to earn as a developer, that's one story. You will earn, but much less. Let me give you an example. You can build, for example, houses, as all developers, businessmen engaged in construction, contractors do, and earn money by selling finished apartments, square meters. Or by reselling something, but with added value. You can build several houses, a cottage village, for example, and earn money on people, that is, on the fact that in this village you will have your own stores, your own snack bars, your own hairdressers, your own commercial real estate. Note that here the investment strategy is much smarter, deeper, more comprehensive. Not just build a high-rise building on a small piece of land and sell as many apartments as possible at the highest price, earning once, but earning throughout your life, stably and in large quantities. Play the long game and make money on the most valuable resource, people. And in such a scheme, by the way, it is not profitable to build houses poorly or of poor quality. Making money from people, from selling them goods and services that are in demand, is the most profitable and long-term way of investing that has existed at all times. Understanding this explains, for example, why you will not be allowed to buy a commercial property in every location. There are particularly profitable places where you will simply not be allowed to put your own store, stall or cafe. Like, we ourselves want to make money from these people and we will not let anyone else here, in this location. For example, an investor did not build and sell inexpensive apartments in order to now share the profit with you, a stranger. This is not understood by those who constantly criticize, for example, investments in residential real estate. The analogy with a bucket of milk from a cow is also applicable here. You do not care how much the cow itself will cost in nominal terms, 10 kopecks or 10 million, it is important that it brings several buckets of fresh milk every day. It is important not only to learn how to sell yourself, your service, your time for money, but to try to pack this service in the most complex packaging possible, that is, to sell some intellectually processed product that includes long-term profit, future. If, for example, you work as a hired hairdresser today, then in parallel it would not be superfluous to develop your personal client base, develop your own brand, maintain social networks, for example. This will be much more valuable and will give you advantages, will give some uniqueness and originality. And, of course, in the end, will give much more income. I called this video, What Will Make You Rich and How to Make Money. So, friends, remember this simple formula. The desire to overtake the market in profitability at all costs, to overtake the average profitability in your investments, usually ends in tears. Remember the risk/profitability ratio. The higher the profitability, the higher the risks of losing the entire investment amount. Slow and steady wins the race. This wisdom did not arise out of nowhere, but was suffered by many generations of people, including investors. Is it really that important to get rich quickly, taking on additional risks? Why do people do this at all? Now I will try to explain, put everything on the shelves. Look, for example, I will now take any amount, say $10,000 and try to invest it in the most risky instruments and show, for example, a return of 300% per annum. And if suddenly everything works out for me within a year, then the capital will increase 3 times, the account will already have $30,000. Will I become rich from this? This, of course, was a success, a good amount, but globally it will not make me rich, even under favorable circumstances and events. Then why do people declare this 300% return? The correct answer, to sell people hope. If I showed the same result publicly, somewhere on financial platforms for copying investment decisions, then seeing such a success, thousands of ordinary people, novice investors will definitely subscribe to me. And, only by receiving commissions from brokers, for the fact that thousands of people signed up, you can become rich. All financial public gurus work in approximately the same way, like Ray Dalio and others. That is, they monetize people's trust. They did not form their capital with their own money, but simply take on extremely high risks, publicly show high returns, and then sell people hope that this will continue in the future. If they succeed, if they are lucky, then they can become very rich. First of all, on broker commissions. If not, then you can always find reasons for failures and write off the bad experience, sacrificing some of your image. Remember the famous film with Martin Scorsese, The Wolf of Wall Street, especially the scene of the conversation in the restaurant between Leonardo DiCaprio's characters and Matthew McConaughey. Brokerage commission and selling a dream, faith in the best, this is the main thing that brings money in the stock markets. You can either get fabulously rich or lose a large part of your capital. It is a risk, a game in which you will not set the rules. Remember that wealth, capital, is not only money, it is also intangible assets, which I recommend you always remember. Your education, knowledge, health, family values, values associated with communication in society, all this can be a much more valuable resource than money, than the accumulation of virtual numbers in a bank account. I think I gave some food for thought, several very useful thoughts were voiced in this video. I hope you will draw the right conclusions. Subscribe to this channel and see you soon.